All right, good evening, everyone, and welcome to the Adams Brothers Podcast. Happy hump day to each and every last one of you out there in Facebook and YouTube land. Thank you for joining us here on this beautiful Wednesday afternoon here in sunny South Florida. Thank you all for joining us here. We're joined here this evening with Mr. Praveen Bisundial. He works for Primerica, and he specializes in the areas of investments, insurance, estate planning, and recruiting. So we would like to welcome Mr. Bisundial to the Adams Brothers Podcast. Welcome.
Thank you, guys, for that warm welcome. Appreciate you guys for everything that you guys have done, and I'm super happy to be here tonight with you guys and to share some value with you guys in whatever way I can. So just a little bit about myself. I've been in the finance industry since 2017. I'm actually a graduate of FIU. So if there's any FIU Panthers out there, go Panthers, right?
Go Panthers.
Go Panthers, baby. Okay. So I studied finance. I come from the sports background, used to be an athlete, got into personal training, and just started to realize that a lot of people, guys, struggle with their health because of their wealth. And so that's what got me into the finance industry. I've been doing this now since 2017, so almost 10 years now. And this is where I met these two great gentlemen right here. And we're kind of creating this partnership here to bring now this education out to the city. So I appreciate it. Thanks for having me on here tonight.
Yes, indeed.
You're very welcome.
We definitely want to educate our audience as much as possible on every aspect of, I know we do a lot of just podcasts. I mean, a lot of politics and other things, but we try to educate our audience as much we can on a variety of topics and issues.
Right. Especially some of the areas that you specialize in. And some of those areas, again, like I said, there are investments, insurance, estate planning, and recruiting. So you work for Primerica, and let's start with the area of investments. So tell us give us some information on investments and how to invest and what are the best ways to invest, and just give us some information and then we'll follow you.
Wonderful.
Yes.
So actually, before we even do that, I'm going to kind of take it one step back. And I'm going to actually kind of, if you can, pull up my screen there for me, please.
Yes.
Daryl, I'm going to actually kind of give the audience a little brief overview on Primerica itself, okay? Just so that way people actually understand who we are first before I get into all the education portion of things, okay?
Okay. Go right ahead.
Here, let me, can you guys see everything clearly?
Yes.
Yes.
Yes, we can see.
See my screen moving and everything, right?
Yes, we can see everything.
Amazing. All right. So just a little bit about Primerica for those that never heard of us. Primerica has been around, guys, since 1977. Very large, long time. We used to be owned by Citigroup. We actually left them in 2010. And so Primerica is actually now a publicly traded company. So those of you guys have heard of ever heard of the stock market before, you can actually look up Primerica. We're listed on the stock market using this ticker symbol right here. I always like to bring this up, one from a credibility standpoint, but also a growth standpoint as well too, where right now Primerica is actually listed as the largest finance company in North America today. So just to kind of give you guys an understanding of who we are and how big we are, we have over 6,200 offices all over the U.S. We're in all 50 states with over 155,000 representatives. And we have over 7 million clients around the United States just within the last 15 years. Okay. So just a little bit about our company. We don't only do investments like Daryl had mentioned. We also specialize in other areas and like life insurance, how to get out of debt, how to earn more money. And the biggest thing that we really focus on is teaching people different concepts about money and finance, so that way we can get people comfortable with the education, right? I always say this: if you understand the rules of the game, you understand how to play the game. But if you don't know the rules, you don't know how to play. And most middle income households, right, they don't know the rules of the game because we go through elementary, middle school, high school, and even college and never took a class on money. But yet our whole life is decisions based off of money. So this is where I really specialize in teaching the foundational concepts on money and finance, which now allows people to kind of then put together a game plan, figure out where they're at, where they want to go, how to get there. And then Primerica gives us the products and services to give the solutions to the problems. Okay. So now some people have heard about Primerica, some people haven't, but maybe some of these companies that you guys see on this screen here, some people can recognize some of them. I know a lot of people recognize like Fidelity. Some people can recognize like TD Bank, Invesco, Lincoln Financial. So what Primerica is, we're a one-stop shop. All these companies you see on the screen here, we actually represent every single company on the screen here. On top of that, this is where what you guys said a second ago, where I specialize in multiple areas. This is how it's done as well too. We have a web where we work in all different areas of personal finance. So that way people that want to work in the industry can have multiple streams of income, but then clients can only deal with one person and get all their solutions in one shot. That make sense?
Yes.
Yes.
Okay. So now going back to your question, now that you guys understand a little bit about who Primerica is, let's talk about some investments. Okay. So to start off, I always like to educate and teach people the foundation of money. Okay. And so what the foundation of money is just understanding how money grows and how money actually works. So this is a rule, guys, that's been around for hundreds of years called the Rule of 72. Most of the time when I ask people if they ever heard of it before, most of the time people never heard of this rule before, even though it's been around for hundreds of years, right? And basically the way the rule works is you take this number right here, 72, and you divide it into whatever interest rate you're getting on. Okay, now your interest rates could be on an asset, but your interest rates could also be on a liability as well too. Why? Because interest rates are on both. But it doesn't matter what it is, whether it's asset or liability, as long as you take the number 72 and you divide it by the interest rate, it tells you the amount of years it will take your money to double. Okay.
Quick question: Why did they pick the number 72? Is that a life expectancy of the human being, of a man?
No, that's actually it.
How did you come up with that number?
So I didn't come up with it. This is actually a rule that's actually got invented by Albert Einstein. And he came up with this rule because of the amount of years of history looking at the market and just tracking, right? How many years the money actually takes to double, depending on what interest rate you get. 72 has been the number that has come closest to being pinpoint to how many years your money can double in. Does that make sense?
Yes.
So 72 from zero to 100, 72 has been the most accurate number that you could use to take divided by your interest rate, and it can accurately spit out how many years it'll take your money to double. So It's not me that created it. It isn't even Primerica. This is something that was created by Albert Einstein over 100 years ago when gravity got created as well too. Okay. It's just from history. Okay. But the reason why we teach people about this is because most people save their money where, guys?
In the bank.
Exactly. And the problem is that the bank doesn't even give 1% on your money. So if you did get 1% on your money, that means it will take 72 years to see your money actually double one time. The problem is how many 72-year doubling periods do you have in your life?
Not many, just one.
Many, right? If you're 20 years old or you're 18 and you're starting to learn about this, you hopefully have one doubling period, right? So this is where we teach people about different vehicles as well too, where now at a 4% return, your money doubles every 18 years, which is better than 72. But I'm sure most people would prefer their money doubling in 6 years than in 18 or 72. So this is where, guys, I come into place, because when I show people this, everybody, like you guys asked me a second ago, where do you go to get this 12%? Where do I invest my money, right? Because people can hear the return, but now can I actually see it? Well, absolutely. Okay. So this is where I sponsor people to get this license right here. First off, it's called an investment license Series 6. All right. And this license now allows you to be able to get access to industries, to be able to learn about all of this that I'm teaching, but then also be able to now teach others as well too, and make some additional income part-time at the same time. Okay. So what does that vehicle look like? Well, this is where we go into teaching people about vehicles that are called stocks and mutual funds. Okay. Now, when you ask the average person what a stock is, most people can kind of get an idea on what a stock is. People understand stock is part of a company. And if the company does well, you make money. The company does bad, you lose money, right? The problem is that which company do you pick? How much time do you have to research the company? Do you know the higher ups, the vice presidents, the CEOs of the company, where you can get an idea on what they're looking to, what direction they're looking to go in? The answer is no for most people. So the problem with stocks is that now you're putting all your eggs in one basket, which that's where it becomes too risky for people. Does that make sense?
Yes.
Yeah.
So this is where I teach people about the vehicle called mutual funds. Okay. Because when I ask people what a mutual fund is, most people have never heard of it. Actually, sometimes people tell me mutual fund is what they do with their wife or their spouse, mutual fund, right? But no, that's not what it is. Okay, I'm trying to talk business here, all right?
Yes.
So what ends up happening is that a mutual fund is exactly the same thing, guys, as a stock. The only difference is instead of owning one company at a time, a mutual fund allows you to now own between 50 to 200 companies all in one sitting. So I want you guys out there that are listening to this tonight to understand that all a mutual fund is basically owning a mall versus a stock is you owning one store inside of that mall. Does that make sense?
I mean, that's a good analogy. Yes.
And if you ask the average person, what would they rather own, the whole mall or just one store? What would the average person say?
The mall and the property. The property too. I want to own the property and the
mall. Own everything. Exactly.
I want to own everything.
And why is that? Well, because of this right here. It's called diversification. So now we're put into a position where you don't have to have all your eggs in one basket. You can have them spread out everywhere so you can hedge risk, but you can also increase profitability as well too. And this is an example of what a mutual fund can look like. See this square right here where you have like American Express, you have Apple, you got McDonald's, you got all different companies, but you also have different industries as well too. That is what I mean by diversification, because McDonald's is in a totally different industry than American Express. American Express and McDonald's is in a different industry than BP. So now you have a little bit of everything, so that way you can increase your profits, but then you can hedge your risk as well. Okay.
Now let me ask you one question real quick. If the average person was looking at that and had to pick out of those companies we see there, I'm thinking I would probably pick Apple.
Well, that's the reason why we don't just pick one.
Right.
Because have you ever heard of a company going out of business before?
Oh, yeah.
Exactly.
We see it all the time.
Exactly.
In this economy.
And that's the problem. We just don't know. That's why you want to own the mutual fund, because of exactly what you said. If you want to own Apple, great, own Apple, but also have Samsung in your portfolio as well.
Yeah, diversify everything.
Exactly, because now if Apple goes out of business one day, guess what? Samsung is going to be the thing that everybody goes to. So at least now you can keep yourself afloat having that diversification.
Especially the banks, because you look at, I see Bank of America on there, and I remember banks like what was the bank called? Wachovia, which is now, I believe, Chase.
Chase. I mean, no, Wachovia is Wells Fargo.
There used to be Barnett Bank, and none of these banks are around anymore. The names changed.
And look at other companies: Toys R Us, Sears, right?
Tyco.
What would you say?
I think it was Tyco. It used to be a toy company called Tyco, right?
Tyco,
I remember.
Kmart.
Kmart, right? So these are all companies that if you invested into them directly, hey, maybe you made money over a couple of years, but when they went down, you went down with it as well. But now if you own a portfolio that had, let's say, Kmart, and then also, let's say, Amazon in it as well too, you're not stressing, because if Kmart goes, Amazon balances you out. You get me? And that's the key with mutual funds, okay? Now, number two, something that you asked about is, how do I know when to buy, when to sell, and how often do I got to look at all of this? That's the cool thing about mutual funds as well, is that clients don't have to worry about all the buying and selling of stocks, the clients only really have to worry about what is their budget. It's the financial advisor, i.e. me. It's my job to figure out what's their risk tolerance, time horizon. The client just understands, okay, this is how much I can contribute monthly. And then the guys on Wall Street that actually do this for a full-time living, they are the money managers that help us advisors and the clients buy and sell all the companies in the portfolio based off of the client's risk tolerance. Does that make sense? So now the clients don't have to stress. And that's huge because guess what? When you're at work for 9-10 hours a day, then you got kids, you got practice, you got this, you got that. You don't have time to sit down and now go watch the market and see what happened. And better yet, when you do sit down and watch what happened, it already happened. So you can't get ahead of it, right? So this is where you need the money managers to help you out so that way they can help you beat the game and manipulate it in a way where it can benefit you. Okay.
So how often do you watch the market? Let's say if you had clients and you were watching the market for them. How do you monitor the market?
So I'm not the one that watches it. I'm what's called a registered representative. I'm not the money manager. The money managers are on Wall Street. You don't want me as the money manager because I'm dealing with clients all day. So when I'm dealing with clients, who's managing the money if I'm the money manager, right? So we don't want me as the money manager and the registered representative be the same guy. So the guys on Wall Street, they're the ones that do all the money management. I'm just basically the middleman that now distributes the education from Wall Street to Main Street. That's my job. But now to answer your question, what I do offer is I do sit with my clients twice a year. So every 6 months, I sit with my clients and we review their portfolio.
Is that virtually or in person?
Either. Depends on where they're located. If you're in New York, well, I'm not flying to New York. But if you want to come to Miami for a vacation, you're more than welcome to come down, okay? But if you're local, I'm talking about Miami-Dade, Broward, West Palm, even potentially Orlando area as well too. We can meet in person. Absolutely. We can get coffee, have lunch, and we go over your stuff. But some people are good with Zoom and virtual nowadays. I'm flexible. I could do either or. Okay. My office is located in Miami Lakes down here in Florida. And I do have an office that people are also more than welcome to come in and meet with me at my office as well too. Excuse me. But to answer your question, I do meetings. I do visits twice a year with my clients, just to basically go over their portfolio, give them some updates. This is how it's doing. This is how the market is looking. This is what we're performing. And what are some tweaks that we need to make, whether it's more contributions, more aggression, whatever the case may be, more conservativeness, whatever it is. So twice a year is a good enough amount of time to sit down with clients to be able to review, because you need to give it time as well too for the actual funds to work itself at the same time. So you don't want to be looking at it too much every day, because remember, you're not looking at specific companies, you're looking at a fund as a whole.
All right.
Okay.
Yeah, we have a niece that she sits there and she watches that stock market, and so she does very well. She does very well.
So she is what's called a day trader, which is different than what I am. And there's nothing wrong with day traders. Day traders, kudos to you. Not everybody can take on though that weight of trading, right?
Right. She has that flexibility where she could do that, from how she work and she's
not only flexibility though, but she also has some sort of comfort level with the information as well too, because that's the other thing about it. And I always tell this to people: everything that I'm teaching here tonight, guys, Primerica did not create. This has been around longer than Primerica got started. Primerica got started in 1977. Mutual funds and the stock market has been around since 1924. So it's long before Primerica. Does that make sense? So all of this information is online. Problem is that it's too much information and people don't know what to read and where to go to actually now put it together for themselves. You get me?
Right.
And so what I would say is kudos to your niece, because out of every 10 people that I sit with, I only find one day trader out of every 10.
Yeah, she's pretty good at it too.
Yeah.
Yeah, she went to that's what she went to school for, college for.
Yeah,
it's like 2 master's degrees and a bachelor's degree.
Doctorate degree.
So
you just proved my point that she has some comfort level with the material.
Right.
Well, I love it. All right. So this is, guys, where what we teach people about. Okay. And this is where we would advise people to park their money. Because if you see here, average, right? Mutual funds over the last 100 years have averaged between a 9 to 12% rate of return, which now going back to what we were talking about over here, if you're now able to get a 12% return on your money and using that same rule that we were talking about, now people can be in a position where every 6 years their money could double, which now you have more 6-year doubling periods than you do have 18 or 72-year doubling periods. Does that make sense?
Yes.
Okay. And that's the reason why we use mutual funds, guys, as the vehicle to help people get from A to B, because not only does it give you a good return, but it also hedges risk tremendously with the diversification and the money management that you can have on it as well too. So it's a bang for your buck, best of both worlds.
Okay.
You guys have any general questions on that? Does the audience have any questions?
No, we don't have any comments yet, so you could go ahead and once the comments start coming in, we'll hop in. And
if anyone have any questions from Praveen, put it in the chat, and we will ask him the questions. If anyone out there watching, just put it in the chat, and we will ask.
Cool. All right. So what I'm going to do is I'm going to show you guys now a live example just to kind of give you guys a better understanding of putting all these concepts to numbers, so that way you guys can kind of link 2 and 2 together. Okay. So I want you guys to take 2 individuals, take 2 twin brothers, okay? And both of them win the lottery, all right? Both of them win $25,000 each. One of them, though, knows me. Brother B is the one that knows me, so he invests his money. And brother A does not know who I am, and he keeps his money in the bank, okay? So this right here is kind of now putting that rule of 72 into play in a live scenario. This is the difference, guys, between investing versus having it in the bank. At age 29, right, getting a 4% return using Rule 72, the money doubles every 18 years. That means by time they turn 65, that 25 grand would have doubled twice, leaving them with a total account value of 100,000. Okay. Now, brother B, because that's my friend, let's say, right? Brother B knows me. They take their money and they invest it instead of leaving it in the bank. But now, because they're getting a 12% return, doubling every 6 years instead of 18, same age that we start at, same age that we end at 65, look at the compounding effect that money can have for you if it doubles at a quicker period versus against you. What would you guys prefer to be, brother B or brother A?
Well, brother B, of course.
Well, I'm gonna tell you like this. I'm old school. I might want to just leave mine in the bank there and let it gain interest. I know what you're saying. I understand exactly what you're saying. I mean, what I'm saying is you have a lot of people that are old school like that, and they believe just putting it there. We were always told growing up, even in school, our teachers told us,
save your money,
put it in the bank and live off the interest of, because I remember back in the days, they were telling us that $1 million in the bank was like $50,000, which was money back when I was in school.
Right.
Which was in 84.
Because back in the day, they would give you 5% on $1 million at a bank. Today, they won't do that.
Yeah,
so that's the reason. I actually sat down with a client yesterday. She has about $500,000, was looking at TD Bank to dump some money in there. Maximum return that they would give her on $500,000 is 2.49% in a high yield savings. So the problem is that they're not giving the interest rates that you're giving right now, that you were mentioning to me there, Adam, that you got when you were growing up. Number one. Number two, if you're old school like that, listen, there's nothing that I can do other than educate, but understand if you're not willing to get with the times will push you behind.
Oh, of course.
Meaning that you're going to have to work pretty much till you're dead and you'll never retire. And that's not really fun either way.
Right.
So
and the truth,
kind of pick your balance.
Right. And the truth is, a lot of people, they're very caught up into these politics and everything. Politics plays a big role in how they invest their money. And Some
But you
people
know
don't
what?
like to
Wanna know
invest with the Democrats. Some people don't
you know
like to
what's
invest
funny,
with the
Daryl?
Republicans and
You wanna hear
everything. So they're afraid to invest their money.
So you want to hear what's funny?
Yep.
Looking back on 100-year history, it
Mhm.
doesn't matter if a Democrat or Republican is in office. Market still performs the same.
Oh, of course. Unless they do something drastic like war, like a war or either some conflict.
But it's happened. We had 08, 09.
Yeah.
We had a couple World War I, World War IIs. We had COVID happen. We have a lot of things. We have a lot of sample sizes to show. And we also have those sample sizes to show with different parties in office.
Yeah.
The market
no
still does the same because you got to remember the market is a reflection off of the economy that we live in.
Right.
So what are you investing into? You're investing into the companies that you use every day. Guess
Right.
what? It doesn't matter if you're Republican or Democratic. They still need to eat. They still need healthcare. They still
Yes.
need to drink water, right?
Right.
So they still need the companies that we're investing into regardless. So that really doesn't actually play a big difference. People think it does, but it actually truly
Yeah.
doesn't.
Well, you need to come and educate some of my coworkers because they think, oh, when the Democrats get in there, it goes down to the toilet, and the Republicans get in there, they're the lifesavers of the whole world and everything.
That's
And
what
then the Democrats.
that's what the news does to you.
Right. And
The
then
news
and
sells the fear so much that it puts the middle income in a position of not
Exactly.
knowing what to do.
yeah.
And they get stuck. And that's why
Right.
there's so many middle income communities today, not because this education's not out there, because it is. It's because nobody's distributing it. And that's where Primerica comes into place.
Yes, indeed.
Okay. So good stuff. I love it.
But yeah, and to answer your question again, we would rather be brother B.
Yeah.
I know you guys would. I know
Yeah.
you guys would. I love it. Okay. So this is the goal, guys, is those of you guys that are out there listening to this and you guys, want to learn more. I'm not telling you guys to make a decision tonight. Okay. What I am saying is that this is a great opportunity that you guys can now get access to me to sit down, ask me questions one-on-one, and have a personalized conversation where we can figure out what makes sense for you. Because everybody's financial situation is different. And that's something that's very important as well. What's good for me is not good for you. Does that make sense?
Of course.
Now, it may be, it could be this, what's good for me is what's good for you, but we don't know. You get me? And that's why, number one, it's great that Primerica has such a wide web because everything is customizable. Just like when you go to Foot Locker, right? You can get whatever you want, and you can also get any brand as well, too.
Right.
Same thing with us. Okay.
Right.
So that's
right.
where, this podcast really here is meant for you guys to just know that you guys do have a professional now in your city and wherever you're located listening to this to be able to tap in, call me, text me, reach out to me, have these conversations, and we can see what makes sense for you and then take it from there.
Exactly.
Yes.
Okay.
Makes sense.
Awesome. All right. So this is where the investment, pretty much kind of wraps up. Do you guys or the audience have any general questions when it comes to investments? Because everything further is now pretty much getting technical, going case by case based off of scenarios.
Property. Most people like to invest in property.
Yep.
So what advice do you have for people that will want to invest in property, that's looking to go
real
in
estate investing?
Yes.
Right. Well, you don't, I know you don't, that's not one of your areas, but I know every time I hear it's always property, especially here in South Florida, with the home, with the homes being so priced, through the roof right now. So,
So
I know I know that's not an area you specialize in, but what advice would you give them if they wanted to invest in property?
So it is, and it isn't an area I specialize in because it does have a connection with the investment world that I tap into. But I don't specifically kind of do real estate investing for people.
Right.
One advice that I would say is you got to have some money to start off with, right? I don't ever recommend somebody to get into real estate investing unless they have at least $100,000 in liquid cash. And the reason for that is because you need to understand that when you get into real estate investing, you do have unexpected expenses that start to come about that if you don't have some reserves, you're in oh crap mode very quickly. Does that make sense? And a lot of people, I'm sorry, go ahead.
I'm sorry. I watched on home TV, I believe it is, on home TV channel where they be fixing all these houses up. I watch that a lot. HD TV, I believe the channel is. And let me tell you, I see all kind of unexpected cost overruns all the time. Exactly what you're talking about. That just in as far as the rehabbing of the place, getting it ready to sell. So I just wanted to make that and let you go on
but
with
not
your
only
point.
that, I mean, even if you own the property and then let's say, you know, you want to flip it out for rent, you know how many clients that I deal with that got issues with renters that they got to evict them early and now the owner has to now cover that rent themselves until they get another tenant in the house. You also got homeowners insurance, you got property taxes, right? So there's a lot of different things that people don't realize when it comes into real estate investing, that people just think it's cool and sexy to get into real estate investing, but don't realize all the A to Z details about it. And so that's why my first advice is you got to have some reserve cash to be able to get into it. So that way, when those unexpected expenses come up and you do have these other things that you got to pay for that maybe it didn't get covered through your flipping, then at least you have your reserves and you're not stressing, right?
That is very true.
The second thing I would say is you better be a decent GC, a general contractor, right? To kind of understand the basics of plumbing, AC, things like that. Because if not, guess what? You're going to increase your overhead, which is now going to lower your profits because you're going to have to outsource and hire other people to always pretty much do all the work that you could be doing to lower on that overhead. So that's another thing that is something to think about is all the work that you have to do when it comes to real estate investing, right? Because it's your property, not the tenants. The tenants don't take care of it the way you do, right?
They just tear it up,
Exactly. And then guess what? Roof gets ripped off due to a hurricane. Now it's your issue to deal with, your insurance that you got to deal with, right? So these are all things that I look at where it's like, if I can get 12% on my money and not have to do a thing, why would I get into real estate investing and have to have so much headaches just to get the same return? Right? So to really answer your question, honestly, it really just depends on what they want to do and kind of what assets do you have going for yourself right now. I think that's the two major things that you got to look at. Because I think if you understand where you want to go and how much assets you have accessible to you as of right now, then that's where you can kind of start to decide if real estate investing is something that makes sense for you, or maybe a mutual fund is something that makes a little bit more sense for you instead.
Okay. Make a whole lot of sense. Okay. So we'd like to go on into insurance, the insurance aspect of the area that you specialize in. Insurance, which when people think of insurance, that may mean life insurance, and we'd like to know more about life insurance, the whole life, term
and
life,
annuity,
the annuities and everything. So we'd like to dig down into the insurance part of the area that you specialize in.
Wonderful. Yes. So life insurance is the area that I specialize in, and what we teach people here in Primerica is a concept, what's called a theory of decreasing responsibility. What that basically means is all life insurance really is, it's buying money until you guys have money. Okay. In the early years, you need to have life insurance on yourself because the loss of your income would be devastating. Excuse me. But later on, nobody can retire off of life insurance. If somebody ever tells you you can retire off of life insurance, run, because they have no clue what they're talking about. Okay. Life insurance is buying money until you have money. Okay. They should actually call life insurance death insurance because it's only really meant for when you die. Okay.
That's right.
Investments and savings is meant for when you're alive. And that's where the retirement side of the spectrum comes in. So we teach people how to cover themselves in case something happens prematurely, but also now invest properly, like I just taught you guys. So that way, if you live and make it to retirement, you also have money as well too. Okay. And this is where this license comes into place. This is actually the first license that we sponsor people to get. And then the second license that we sponsor people to get is now the Series 6 investment license. And that's where, when you combine the two licenses together, you now are considered a financial representative. Okay. Now, just to kind of throw this out there on a side note, Primerica is actually the only company in the industry that'll sponsor one individual to be able to work in all 6 industries. Think about this for a second. You guys, you two gentlemen here, right? You guys know mortgage brokers. You guys know lawyers that do estate planning, right? You never met a person that does both other than me, right? You also never met a life insurance agent that's also doing estate planning and investments and also mortgages as well, right? So that's what makes Primerica so unique, again, is that they all go hand in hand together. One hand washes the other. But the problem is that most companies in the industry keep it all separate, so the client gets played tug of war with, okay? And I'm going to show you guys a live example on what that means. So like you guys just brought up here, okay? There's 2 types of life insurances out in the industry, something what's called cash value, and then there's something else what's called term, okay? So cash value, like we mentioned above there, it's basically life insurance and its savings combined together, bundled into one product, okay? Now, cash value and term cannot be compared against one another. Why? Because cash value is 2 products, term is just 1 product. Does that make sense? So that's apples and oranges. You can't compare 2 versus 1, right? You got to compare 2 versus 2 or 1 versus 1. The thing is that cash value cannot be sold without the savings or without the life insurance. You have to get both, whether you want one or the other, okay? Now, the problem is that when you bundle it together, right? Life insurance is meant for when you die. Savings is meant for your future. Nobody can live and die at the same time. If we could, I would love to try it, right? But we can't. So the problem is why does it make sense to bundle a product that's meant for your death and a product that's meant for when you're alive and put it together into one if you can't live and die at the same time? It doesn't really make sense, but the problem is that most people never get it explained to them that way. Most people get it explained to them where they pay a premium monthly. If they die, they have money. And if they live, they're creating this word right here, what you see all over social media, which is called a nest egg, right? But what happens, guys, is that there's rules from the insurance world and from the investment world that get blended together when you combine the 2 products together, because you end up creating this right here, which is an annuity that you just end up paying on a monthly basis. So what are the rules? Very simple. First rule about these policies, and by the way, guys, these rules are all listed in the first 10 pages of everybody's policy. The thing is that clients don't know what to look at or look for or how to read it. But it's in every policy that's either a whole life, IUL, variable life, universal life, every cash value policy, all these rules I'm about to talk about is in the first 10 pages. First rule about them, guys, is that for the first 2 years of the plan, clients lose all of their money in that nest egg. Why? Because it's gone towards surrender charges and fees inside of the policy. See, the reason why these policies actually get sold is because the agents that sell them don't have an investment license. When you don't have an investment license, you cannot sell an investment. So how can an agent get residual income without selling an investment? Well, they could get it by selling an annuity. Does that make sense? But inside of an annuity, the fees now increase, which now limits the client's profitability and pays the agent more money. Which, does a client like that? Not at all, right? Nobody would like to lose their money the first 2 years, but the agent doesn't say it because then the client will probably not buy it, okay? Number 2 now is the rate of return that you get in these policies, that nest egg that you have, it grows at anywhere between a 1% to 4% return rate because it's in what's called a fixed account or fixed index account. Now, if you ever want to touch the money, because it's all bundled together, you can never do it at a liquid form. You can only do it by loaning it out to yourself at a 4% to 8% loan rate. But here's the question I always ask people. If you were to go to your bank right now and take out $100 and your bank told you, Daryl and Adam, the only way you can take out that $100 is by paying us back 104 to 108, Would you want to take out that $100, or would you like that system?
No, of course not.
Right.
So even though you hear I can borrow from myself all over social media, understand you're borrowing your own money from yourself, and you got to repay your own money at a loan rate. And if you don't, within a 365 calendar year, the company has the right to recharge you the loan rate the next year. And if you die before paying back that loan rate, they have the opportunity now to deduct whatever the loan is from this death benefit right here. How you guys like that? And the problem is,
I don't like that.
The devil always in the details.
But the thing is that because the details are the most important part of everything, right? And here's number 4. If you end up passing away, let's say at 65 or sooner, your family gets the life insurance, but whatever's in the nest egg, it goes right back to the company. And if you end up living till 70, now 70 is not the only maturity age. Some policies can mature all the way till age 132, which is why it's called your whole life. If they do, whenever they do mature at that point, you do get the savings. However, your savings component can never grow more than what the death benefit is on yourself. So if you have $250,000 in life insurance, your savings can never grow more than $250,000. Does that make sense?
Makes
So
sense.
it always limits you on what you can do. Okay. So this is how Primerica, guys, got started 50 years ago. We didn't create term. Term has been around for just as long as cash value. But what we did is we created a concept, what's called buy term insurance, and then you learn how to invest your money on the side. So it's called B as in boy, T as in Tom, I as in igloo, D as in dog. So BTID. You buy term insurance, and then you learn how to separate the investments so you still have insurance and savings like we talked about on the left, but now you as a client can get more bang for your buck. And look at this as an example. Same $250 that we're taking, instead of getting you a whole life policy or IUL where you pay $250 for $250,000 in coverage, now for $70 a month, you get $500,000 in coverage, meaning that you get more coverage for less money. Why? Because you're just buying one product outright. So when you buy each product separately now you get a discount in the cost per every unit than when you bundle it together. Does that make sense?
Yeah.
And now the difference of $180 that we save you, we can still do savings with it. But because now you're dealing with an investment advisor, not just a life insurance agent, instead of bundling it, we keep the investment separately. And let's say we don't get 12%, but we just, let's say, lowball this a little bit and get 10% on your investment. Look how much you have accumulated now at 870 compared to what you had accumulated at 870 to the left.
Mm-hmm.
Right? The right side is a lot better than the left side, right?
Yes.
More coverage, less price, spend the least amount of money on the liability side and spend the most amount of money on the asset side. And that is what we teach people, because why would anybody in their right mind want to pay more than need be for a liability product? It doesn't make sense, right?
Mm-hmm.
We all want to spend money on assets. And so that's where we teach people, pay the least on liabilities, spend the most on assets. And then if you compare the rules together, this is how they compare. First 2 years, look at the difference. You have money in our investment accounts right away versus losing money the first 2 years. Why? Because your investment is separated from your insurance. So you pay your insurance and you fund your investments separately. Does that make sense?
Yeah.
Now clients can get a better return because they're dealing with an advisor, not an insurance agent only. They don't have to worry about loaning out their money. And now if you end up passing away, this is huge. Look at this. The family now can get both the life insurance plus the investments because there's a beneficiary on the life insurance side and there's a beneficiary on the investment side. So now you get to double dip. Does that make sense?
Yes.
And then the last thing about it is that if you end up outliving till 70, now you walk away with $183,000 more than you bought on yourself when you were 35 years of age at this example here. Okay. So that's where you get more bang for your buck. And then we are the only company in the industry that allows you to actually keep your life insurance policy all the way till age 95 without your premiums ever increasing to what it was when you first got the policy. So if you do want to keep your life insurance till 95, your whole life, you can. We're the only company that allows that. And we're also the only company in the industry that does term policies for 35 years leveled.
Yeah.
Okay. So any general questions regarding this here?
No, but I have, what about the people who would like to get this insurance, and what if they have pre-existing health conditions?
So
will they be able to get either one of these policies right here?
It depends.
Does it have to do medical, blood work, and all of that stuff?
Yeah, it depends on what those pre-existing conditions are. So it's case by case, because I've seen some craziness. So it really is case by case, but I will always say this to people. It never hurts to try, because there's always a way that you could do it where there is no negative kickback to a client. So if that's the case, we could always try. Like, let's say you have a pre-existing health issue, whether it's diabetes, thyroid issue, high blood pressure, cholesterol, all of these different things that people have, right? Like sleep apnea, all these different things, right? I've had clients that have gotten approved, and then I've also had clients that have gotten denied. You get me? So it really is a real case-by-case scenario. If you have pre-existing health conditions, this is where I would say, just like on investments, every scenario is different. Let's sit down. Let's have a phone call, quick Zoom, quick meetup, whatever it is, and we can talk about it. And then we could always try. Worst case scenario, at least you get to learn more about your health.
And also, I have a question, because I sometimes I always hear my brother ask this question sometime. What if something unfortunate happened, you pass away, and you have a drug in your body that's not prescribed by your doctor? Like, it can be anything. I mean, something like
marijuana. Let's just say marijuana.
Or not even marijuana. Let's just say
prescription medication that's not prescribed to you.
Yeah, so that's something that you just take.
I could talk about Primerica's policies. I can't talk about other companies, but I can tell you this: once the policy is issued with us, we pay out. So we actually have the #1 percentage payout ratio in the industry, where 95% of our policies get paid out within 14 days. The average payout in the life insurance industry is 6 months. So 95% of our policies, we pay out within 14 days. Once we issue it and it's issued with us, that means we did the due diligence when we had you in the underwriting process, that if that is the scenario there, Adam, we still would pay out, because we felt while you were in the underwriting process that we are willing to take on those type of risks with you as a client.
And the reason why I believe my brother asked that question, because we both know friends that one passed away, her father passed away, and he was in pain. So a wife or somebody, hey, take one of my pills, or trying to kind of ease the pain, and that showed up when he passed away. They did an autopsy. And that showed up. Why did this person have this in the system when it wasn't prescribed by a doctor? So guess what? They denied the policy.
Yeah, companies do.
So we have to. That's one of the reasons why we have to ask that question specifically
for your
targeted toward Primerica.
It's a great question. No, it's a great question, and that's where we're unique. I will say this though, and this is not a Primerica restriction. This is a state of Florida restriction. If anybody commits suicide within the first 2 years of their policy, every company has the right by the law in Florida to be able to contest that payout.
Right.
So there is a possibility that that's what it could have been considered as, taking a medication that wasn't prescribed to you, that if it was considered or labeled under a suicide attempt, that is a potential reason where if it's within the first 2 years of the policy, that a company could deny a claim now.
Right, but that's like a
Of
that's
where
broad. You know what I'm saying? If they don't want to pay out the pay out the money, they could say, well, we could consider that as suicide. You took a painkiller, some Vicodin that you shouldn't have taken, so now we're going to use the suicide, to not pay you.
Yeah.
That clause in the contract did not pay you, and that's what pisses a lot of people off.
And we saw that before. That's why we asked.
Remember, though, that is not a company thing. That is a state thing.
State of fraud.
So,
right.
So that's something that it is unfortunate, but
it's an avenue that these insurance companies could use, though.
Correct. But going to your specific scenario, right? Like if it wasn't considered, let's say, suicide, and it's with us, we would pay out. But if it's suicide within 2 years, that's the only way that we would not pay out is suicide, or they pass away during the underwriting process, and we lied on the original application. But once it says issued, you have no stress with our company if we're going to pay out or not.
Okay.
Right.
So great.
Thank you for clarifying that.
Yeah, it's a good question. It's a big concern out there, so it's huge.
Right.
Okay. So with that, just to kind of move on a little bit, I do want to talk a little bit about debt as well, because debt is a big thing in today's communities. A lot of people have student loans, credit cards, things like that. And then just to kind of finish off, I want to finish off with the estate planning portion of things, since that was like the couple different areas that you mentioned I specialize in.
Right. And if you're just joining us, we are joined here today with Mr. Praveen Bisundial.
Bisundial, yes, sir.
Bisundial. I'm sorry. Yes, that last name is a little bit tongue twisted for me. And he works for Primerica, and he's here to educate us on investments, insurance, real estate, and recruiting. So again, thank you for joining us. Go ahead.
Yes,
absolutely. Okay, so a little bit about debt that I always like to teach people is the difference between revolving debt and fixed debt. Okay, this is something super important because so many people don't understand the difference. And I'll give you an example. Okay, revolving debt would be like a credit card. Yeah, like a credit card. A fixed debt would be more like a mortgage.
Yeah.
Exactly. Okay. And they're totally two different things. So it's very important to understand where your debt is, what those interest rates are. I do have systems and processes that can help people get out of debt using the same payments that they're currently using right now, just by taking a look at their balances, minimum payments, interest rates, and things like that. And I teach people a concept, what's called the snowball effect. Some other people out there may have heard it of debt stacking. So any of you out there listening to this, maybe some of you guys have ever heard of Dave Ramsey before. Dave Ramsey actually used to work with Primerica back in the days, and he actually created a course now out there financially where it talks a lot about the snowball effect and debt stacking. Very, very good, useful system to be able to get yourself out of debt using the same money that you're using right now to pay towards it, just by looking at a chronological order that makes the most sense to pay it off in. Not only does it help you get out of debt quicker, but it also helps you save on interest as well, where if you can keep more money in your pocket, then that just benefits you down the road, because then we can take that to invest it. Okay. And that's something that I always like to tap into, because debt, right, is literally what hurts most people in having a net worth, right? A lot of people don't realize your assets minus your debt is what actually equals your net worth. So the more that we can get you on the asset side and the more we can get you out of the debt side, then the higher your net worth can be, which now creates the generational wealth that most people want to create. Does that make sense?
Yes.
Okay. And then last but not least, guys, we also do estate planning as well. And that's something that's really important as well, too. A lot of people today need help getting their will done, their living will, power of attorney, trust accounts. If you own any asset, whether it's a 401k, an IRA, a real estate property, anything is under your name, I recommend to you to get all those documents done there, because you don't want to have your family deal with probate if you were to pass away and you don't have these documents done. Why? Because one, probate is a hassle. Two, probate costs a lot of money. And if you're working for your hard-earned money to make it grow, why would you want your family now to have to use your hard-earned money to go spend it on lawyer fees just for your family members to get it? You follow? So
Yes,
this is where, guys, for a very, very affordable price, you guys can get all these documents done. That can save a lot of trouble and hassle for when things happen. Go ahead, Adam.
Yes, and interesting you say that. Tomorrow, we're doing a podcast tomorrow at 5:30 where we're going to be doing one on guardianship.
Oh.
We have a panel here that's going to be on our podcast tomorrow talking about guardianship right here in Broward County, and they're going to be giving actual cases of some of the stuff that you're saying right now, actual cases. So you might definitely want to tune in and watch that. In the audience, definitely tune in and watch that tomorrow, our guardianship podcast at 5:30 p.m. tomorrow with our panel. And they're going to be talking about a lot of that stuff, that
estate planning,
how everything came about with some of those things you're talking about now.
Amazing. Yeah, no, this stuff is so important. And then on top of our plans as well, and getting the estate planning done, as you guys can see here, there are some other benefits regarding the plan where you do get legal help for, like, let's say research, notaries, if you get divorced, immigration, adoption. So there's a lot of different benefits. And then what's really cool as well is that if something that you need help with legal wise is not listed on here, you do get a 25% discount off of whatever the lawyer's hourly rate is, because you do have access to one of our plans here.
Can you make that a little bigger?
Yeah, could you zoom in a little bit? Because it's a little blurry.
If I do, then it just kind of cuts off some of the
right.
Yeah, but
that's where it's
now everybody can see it.
Yes, that's good right there.
So there you go. Okay. So this is where where it really benefits is that right now for somebody, like let's say you guys, okay, individually, were to want to go get a living will, taken care of for yourself, it will cost you guys about $1,500 for 1 hour of a lawyer's time for you to get a will and a living will and a power of attorney taken care of, right? So this is where with me, instead of having a client spend $1,500 for 1 hour, with me, you spend $600 instead. So less than half the price. But instead of getting access to a lawyer for just 1 hour to do those 3 documents, you get access to a lawyer for a whole year, and you get those 3 documents done, plus any other legal issues as well. And then if you want to do a trust by yourself right now with a good lawyer without me starts off at a $5,000 retainer. With us, to start up a trust, $250 for a retainer fee. So huge difference when it comes to what the bang to your buck that you're getting with me versus outside of me.
Right. Okay. I want to jump in right quick because I hear a lot of people saying, "Oh, if you have property, don't just do a will, put it in a trust. Put it in a corporation. Put it in a trust. Put it in a trust."
Heard so much.
I'd like for you to explain what's the difference between a trust. What's the difference between a will, a living will? What's a power of attorney? Could you? I mean, for the people that don't know.
That's a great question. A will is for when you pass away. Okay, so when you die, okay, whatever you own, it could be jewelry, it could be as simple as like keepsakes, whatever it is, right? The will dictates. Okay, I am no longer here. How do I want all my assets to be distributed? That's what a will states, okay? A living will is pretty much, I want you to think of, let's say you're in a coma, okay? You're a vegetable, but you're still, there, right? So the doctors don't really know, hey, do we pull the plug? Do we not pull the plug? What's going on? If there is nothing in writing on how you wish to be cared for and kind of to what you wish to happen, the doctors really don't know, and they just let the medical bills keep racking up. So this is where a living will actually kind of now kick in, because if, let's say, for example, that's you in that position, you're in a coma, and let's say you have it in your living will, I do not want to be on a vegetable bed or a coma bed for more than, let's say, 2 weeks. On that 2-week marker, that's it. The doctor now has the legal documentation to execute based off of your wishes.
Right.
That makes sense? And we see a lot of fights happen all the time.
Oh, we see it all the time.
All the time. Yes, yes.
Because the loved one is the one that's not there to make their decision. And then you got, let's say, the mom that's like, oh, that's my baby, we can't let him go. And then the dad is like, bro, we're running up medical bills, we got to go. You know what I mean? So that right there causes so many issues that a living will solves that. And then a power of attorney, what that really is now you're giving the authorization for somebody else to basically speak and make decisions on your behalf. A perfect example. Let's say you're a married couple, husband and wife, both of your names are on the mortgage. Husband is in a different country for, let's say, work or whatever the case may be. Wife needs to take out, let's say, a line of equity on the house for whatever business move that they're trying to do or whatever the case may be. If you have a power of attorney now, you can sign on behalf of each other to be able to go ahead and execute. Does that make sense?
Okay. Yeah.
Power of attorneys could also be used for like sick kids that have autism, kids that need like have special needs and whatnot. You got to assign a power of attorney so that way somebody else can make a decision on their behalf.
Okay.
Okay.
And trust.
So that's the difference between those three right there. And then I want you to think of a trust kind of like an extra layer of bubble wrap. Okay. What that basically just means is that if you have a will by itself, it still goes to probate. The will does not eliminate probate.
Now explain probate to people who don't know.
What it is, it's basically what's the word I'm looking for? It's an entity. That's the word I was looking for. It's an entity that is basically linked with your estate. So all probate is, it's an entity that's linked with your estate. So if you pass away and you don't have a will and all these documents done to designate who should get it, it just goes basically to the state of Florida. That's really what probate is. Okay. And so that's why nobody likes probate, because if I worked for it, why shouldn't my family get it? Well, they could if you just do your documents. You get me? Right. But if you don't do it, you're not alive anymore for state of Florida to know that that's what you want to do. So they just take it. And now your family has to hire probate lawyers to fight the state of Florida on why they should get it, not them. So that's where the trust now comes into place, because a will the assets will still go to probate. Just now, Florida at least knows, okay, what to do with these assets because you did your will, but it'll take time. And that's based off of the Florida, however they move. And we all know the government moves very fast, right? That's a joke.
It's the opposite. Yeah,
exactly.
Okay, that's a joke. Okay. So that's why you want to have the trust, because now the trust eliminates probate 100%, where now it can directly, all your assets get passed over to your beneficiaries. And then the will now starts to designate who gets what and what percentage and whatnot.
Okay. So it's best to have a will and a trust. Yeah,
you got to have both. So the will is the start. The will is what you first do, because the will is where you put all your assets on, what you own, kind of what your wishes are and all that good stuff. And then the trust is pretty much like the extra layer of bubble wrap that allows you now to pretty much execute everything that's in the will. Okay. Now here's what I always tell clients. Not everybody needs a will. Okay. And I'm not the lawyer. I'm not a lawyer. Okay. So this is why I always recommend for people to do their will first, because based off of the assets that they own and they put on their will, that's where the lawyers now that I work with can tell the client if they recommend them a trust or not.
Okay.
Okay. Now here's the extension to that. If you can't afford to do a trust, I do recommend to at least get done what's called a ladybird deed. A ladybird deed is what they call a poor man's trust. Basically,
what it is. Could you spell that for me, please?
What, poor man's trust or ladybird?
No, ladybird birdie. Oh, I've never heard of that before.
Me either.
It's lady, L-A-D-Y, bird, B-I-R-D. Yeah, and then deed, D-E-E-D. Okay. What it is, basically, it's now putting the deed, like putting your beneficiary's name, on the deed of your property. So that way, when you pass away, now that property automatically goes to that person that you put, and then you get your will done. So that way they know how to execute it automatically as well too. So a will plus a ladybird deed is equivalent to a trust as well. That's why they call it a poor man's trust. But if you can get your hands on a trust, like with what my new program offers here for this price right here, it's so much better to get a trust because that's your most upper layer of protection that you can get on all your assets for when you pass away.
Right.
Okay. And I hope that
and
that
how much is that trust up there? I can't see the price. How much is a trust with your company?
Yeah. So these two options here, right?
Okay,
I don't offer these two right here. I only offer this platinum one.
plan.
Okay. The reason for that is because with the platinum plan right here, not only can you get a will, living will, power of attorney done, all included, plus other issues for legal services you get access to, but now the trust retainer is a $200 flat fee versus a percentage of a lawyer's hourly fee or a $5,000 retainer fee. So it gives the client the best bang for their buck when we do the platinum option versus doing the other options.
And that $49.95 will go on for how long?
At least for a year. So it's a good. That's the reason why I said with me it's $600 for a year, because $50 times 12 is equivalent to 600, and within that year you do your will, your living will, your power of attorney. You get access to a lawyer for other issues, and then if you need to do a trust, you can start your trust up for a flat fee of $250 instead of $5,000 outside of me.
Trust is $250 with Primerica.
Right. Outside of Primerica, it starts at $5,000.
And $5,000 outside of Primerica.
Correct. Correct. Okay. So these are some of the things that, everybody, like you said perfectly when we first started this podcast, so many people have questions and everybody's scenario is different. And so this is where I really recommend to do this podcast. Don't try to take all this information and now say, okay, let me now put it onto me.
Yeah, come talk to you.
Yeah, right.
Exactly.
Have a sit down with you.
And that's the good thing about a podcast. They can always go back and replay it and rewind it as many times as possible. And they could, they might miss it while we're talking now, but they can always go back and
yes,
and
all the information you provided with us to us on here is definitely is a plus.
Yeah. Yeah. And the real goal is I want people to be able to feel comfortable calling me, texting me, reaching out, to be able to actually talk one-on-one, more personal, so that way we can see what makes sense for them and what doesn't make sense for them.
Okay, so we've been talking to Mr. Praveen Bisundial, and he works for Primerica, and I've been jacking your name up all day, your last name up all day.
But, it's all love.
It's Bisundial.
It's actually one S, so it's Bisundial.
Bisundial. Okay.
Yeah, Bisundial. Correct.
Probably still gonna jack it up, but it's not done on purpose. But and he works for Primerica. And are you on social media? Are you on Facebook,
you guys
and, Instagram, and TikTok, and all of that stuff?
Yes, sir. You guys can catch me on Facebook. You guys can catch me on Instagram. You guys can also catch me on LinkedIn as well too. My Facebook name is Praveen Bisundial. My Instagram name is Veen the Money Machine. So I am the Money Machine on Instagram. You can't forget that name, the Money Machine right there. And then LinkedIn is my name as well too. So I am on social media. You could also type in my name on Google, and on Google, you'll also get my website and everything as well too. So you guys can search me all over the web. I'm everywhere.
Okay.
Yeah. So you had anything else? Yeah, I was
going to tell him why he's give him out your address. Put it up
whatever you want.
Your address in Miami, where you're at, and your phone number.
Where can I put that here?
You can put it in the chat.
Okay.
Well, you can say it now, and we'll write it down and we'll put it in the chat as well.
I can also do this as well, since you guys have access to share my screen.
Yeah.
Let me see if I can actually. Can you guys still see my screen here?
Yes, we can.
Yeah, we can see it.
Oh no. Wait, hold on. It didn't share that part though. Okay, no, this is not going to work out because it's only allowing me to share my one page there. So just put it in the comments here.
Yes, definitely. If you can put it in the comments, that'll be fine.
Put it in the comments and they'll see it.
Perfect. So I'm doing that right now. So I'm going to put my office address for you guys. 60th Avenue, Miami Lakes, Florida, 33014. And then I'm going to put my cell phone as well, too. So that way people have access to that. Okay. 6565. Okay. Go ahead, guys, and let me know if I did it properly. Oh, no. Hold on. I think I put it in the private chat.
Yeah. You might have put it on YouTube.
You have to put it in our
One
comment
second.
section. Yes.
I now see it now. Okay, so connect, comment, connect. Okay.
Have to go to our Facebook Live and put it into the chat.
Yeah, you can go right to your your phone.
Just give it. You can just read it out. We'll write it down and we'll put it in our.
Or you could come back after and still put it in.
Yeah.
You guys are throwing all these different options at me. Let me give it to you guys for right now, and then we can, because it says whoops, they're having trouble connecting right now. So let me give it. Let me give it to you guys. Okay. It's my office address is 15327 Northwest 60th, so 60 Avenue, Miami Lakes, Florida, 33014, Suite 201. And my phone number is 305-282-6565. And my name again is Praveen Bisundial.
Okay.
Yes.
Praveen Bisundial, 15327 Northwest 60th Avenue, Miami Lakes, Florida, 33014.
Yes, sir.
Suite number 201, and our phone number is 305-282-6565.
You got it.
And I want to ask you, do you do a lot of work up here in Deerfield, like for the cities or anything like that, municipalities, Broward County?
Absolutely. I just came from Tamarack, Parkland, and Coral Springs today. I was just at Challenger Elementary School. I don't know if you guys ever heard of it out in Tamarack, but
yes, I did. I heard of Challenger. Yeah.
Wonderful. I just did a seminar for all the school teachers out there at Challenger today. Met with Broward Sheriff Office earlier today as well too. Helped them out with some of their deferred comps, 457s, retirement planning, things like that. Then I just went over to Coral Springs, helped out some business owners as well too. So absolutely. And then on top of that, we're actually with some of the people within the city, me and one of my colleagues, we're actually starting a financial literacy course for the whole entire city of Deerfield Beach as well, with the mindset of being able to extend this out to Pompano, West Palm, Boca, and some of the cities around there. So absolutely, Adam, we do a lot of things when it comes to going up north. 100%.
Okay.
Yeah.
Well, we've been, like I say, we want to thank you, Praveen Bisundial. I'm trying to get your last name right.
You got it.
I got it right. I've had to spell it a different way on my paper here, but Praveen Bisundial.
Love it.
He works for Primerica, and he's educated us on investments, insurance, estate planning, and recruiting, and what is a trust and the will. And if you missed it, you can always go back and watch the playback. So again, we'd like to thank Mr. Praveen Bisundial for joining us here on our show. We really appreciate you coming on to our podcast and educating us. And if you have any questions, you can also reach out to him, again, on social media, and you can also call him at 305-282-6565. So we'd like to thank you for joining us on our podcast, and
join us tomorrow back to watch the guardianship. It's going to be very interesting. I would think, with the line of business that you do, and maybe you could just learn a lot of things from seeing actual cases of some of what you talked about towards the end, at the end today with estate planning.
I love it.
All right. Thank you, Praveen, and thank you so very much for joining us on our podcast. You're welcome to come back anytime you get ready.
And we look forward to working with you if everything come through what we were meeting with last week for the city. We hope everything come through and we can continue to work further.
Yeah. Absolutely. All right, gentlemen.
Thanks for joining us, and enjoy the rest of your evening, sir.
You too. Stay in touch.
Good night.
Yes.
Good night.